You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for CashFlow Podcast. Now, here's Kevin Buck.
Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is real estate and blockchain expert Omar Caraballo. Now, Omar is a civil engineer by trade and founder of multiple companies in the engineering, design, and construction industry. Additionally, he is the co-founder of Arch App, a technology company within the shared economy and blockchain solutions. Now, he is a licensed building contractor and has acted as a specialty contractor in some of the higher quality projects in Florida, such as Brickell City Center and also the Mall of San Juan, located in San Juan, Puerto Rico. Now, here's what you're going to learn during our interview with Omar today. You're going to learn how Omar got his start as a civil engineer and went on to start a highly successful architectural design firm prior to the founding of Arch Real Estate Holdings. We're going to discuss blockchain technology in its simplest form and how it's being used to change the real estate investment landscape. You're going to learn why cryptocurrency has nothing to do with his business. Omar helps provide clarity to the common confusion that exists between blockchain technology and cryptocurrencies. You're going to learn about the various benefits the blockchain will bring to the private placement world, including making what are now illiquid investments much more liquid, which I personally believe will be an absolute game changer. You're going to learn about the opportunity that he and his team are finding in bank-owned distressed properties in Puerto Rico, and much, much more. So with that, guys, I'm very excited to get onto the show with Omar. But before we do, I have a few quick housekeeping items I'd like to run through. Now, like we do each and every week, I like to share with you very quickly one of my personal best of the prior week and also a professional best. So very quickly, personal best. My business partner and great friend, Brian Spear, just got married this past weekend, and my wife and I shared in celebrating this beautiful event in Brian's hometown of Chicago. And so it's been quite a number of years since I had been to Chicago. In fact, I ran the Chicago Marathon back in 2009. That's about the last time where I really spent any quality time in the city. It's a wonderful city. We had an absolute blast, got to explore and be a tourist and go to great restaurants, eat wonderful foods, spent some amazing time with Brian and his new wife and their family. And it was just a wonderful experience overall. And so if you guys know Brian, if you've had the opportunity of interacting with Brian, then do me a favor, shoot him an email, shoot him a text if you have his telephone number, and just wish him a huge congratulations for finally tying the knot. He's got a wonderful woman that now it's going to be his lifelong partner. So she's a beautiful soul in love herself, and he's got a great match there. Now on to a personal best. I'm very excited about a 200-lot mobile home park that we just tied up this past weekend in Texas. This is a deal that we've been working on for many, many months now, and we're super excited about the opportunity. Things are very tight. Opportunities are very tight. It doesn't matter if you're buying mobile home parks, apartment complexes, shopping centers, self-storage facilities. The list goes on and on. Deals are very hard to come by nowadays. There's lots of money out there chasing yield. It seems to be always plenty of other people willing to pay much more than you or I might for an opportunity. And so we get very excited when we can uncover what we feel is a needle in the haystack. And so this 200-lot mobile home park in Texas, I feel, at least at this point in time, is a needle in the haystack. And we've got a going in cap rate pretty close to 8%, which is kind of unheard of nowadays. And there's a lot of upside to be had once getting into it as well. So there's just a lot of opportunity with this particular deal. Again, we're just starting the due diligence. So as you guys know, things can go sideways in an instance, but we're very excited from the high level looking in. We're very excited about this opportunity. Alrighty, moving on. If you love what we're doing here, be sure to go subscribe to the show and leave a review and rating on iTunes. Now, I've got a little ethical bribe here. If you leave a review, I'm going to reward you with an awesome free gift, which will be announced here in the coming weeks. Okay. So for all, I forget 500 or 600 that have left reviews already, I'm going to be offering you a free gift. Again, I'll make an announcement about what that is here in the coming weeks. And for all those that take the time now to go leave that review, be proactive about it. You're going to be on the list as well as far as getting this free gift. And I promise you it's going to be absolutely awesome. And like I do every week, I like to give a shout out to one of our listeners that actually has taken the time to go do that. This is Nick Vole. Nick Vole left us a review. He said, both Kevin and his guests provide great real-world advice on investing in real estate and generating cash flow. I've begun listening to episodes starting back in 2014, and the information is just as relevant now as it was then. Okay, one last thing here before we get on to the show with Omar. Just want to remind you of the free 30-minute call that I offer each and every Friday. You can go to kevinbupp.com to sign up for that call with me. Just one disclaimer. You must include detailed notes of what you'd like to discuss during our call together. If you do not, then the call will be canceled, okay? And just to clarify, this is not a sales pitch by any means, but rather my way of connecting with my listeners and also paying it forward, okay? I've had the opportunity to speak to hundreds of you now over the years on this free 30-minute call, and I look forward to hopefully connecting with you. And so now, guys, let's get on to the part of the show that you've been waiting for. Here's our interview with Omar. Alrighty, guys, it is my honor to introduce my guest for today's show, founder and CEO of Arch Real Estate Holdings, Omar Caraballo. Omar, how you doing today, my friend?
I'm doing great, Kevin. How are you?
I'm doing fantastic. I appreciate you taking time out of your busy schedule to join us here and to hopefully share some very enlightening information about your company, Arch Real Estate Holdings, your background, and also the blockchain technology, which has obviously been a huge topic over the last couple of years, especially as it pertains to the real estate space. And so before we dig into the nitty gritty of it, Omar, what I'd love for you to do is if you could maybe take a few minutes, give our listeners that aren't familiar with your company a little bit of background of yourself and also Arch Holdings.
Yeah, sure, Kevin. Well, first of all, thank you for having me, and I'm really excited. And about my background, I guess we can start off with the title. I'm a structural engineer, civil structural engineer with extensive background and experience in real estate development industry. When I say extensive, it's because ever since I can remember, I was born and raised in the industry. My family goes back 70 years back into the great industrial revolution. You know, my grandfather was a pioneer in the glass and glazing industry and pretty much worked on some of the largest construction projects as the world was just growing through the industrial revolution. So that's how far back we go in the industry. My dad is also an engineer. He was also born and raised in the industry. And then what's really most important about my background, Kevin, is how he took care of just raising me in the industry. And like I said, ever since I can remember, I remember as a kid going to these huge construction projects, and you would see my dad just spending hours, explaining how this whole great project was actually being made possible to this little kid, which for some people may not be, necessary. But for me, it really helped me a lot because, like I said, I naturally developed a passion for the industry. And by the time I got to college, I really, it was really pretty straightforward for me. Having all the experience, I worked my way as I went to college. I studied and worked at the same time. And so when I graduated, having all this knowledge and experience, as opposed to your average graduate that is about to get started into learning the real side of the industry, I had two choices. I could join the family business or I could go on my own. And back then, I had all this knowledge and experience, but for me, I was looking for something more. I was looking for the financial side of it, for the entrepreneurial side of it, right? And so for me, it wasn't going to cut it to join the family business. So I immediately opened my construction, architectural and engineering design and development company. And we just took off, Kevin. Just so you have an idea, within the first 6 months, we were already reaching 7 figures in revenues. And then, we just expanded in the Caribbean. Obviously, we got started in the Caribbean, and then, we expanded to Central America. We opened an office in Panama and an office in Miami. We did some work in Panama for the government, but it wasn't too easy. There's a lot of corruption going on over there. So Miami took off in the US, and we ended up working for some of the major clients in the industry here, in not only in the US, but in the world. I mean, we have projects. We have clients like Topman Properties, some of the major commercial real estate developers in the country, Westfield Malls. We did a couple of projects for them in California, Texas, Boston. We have clients like Porsche Design. I don't know if you know about the Porsche Tower, which is this huge new tower in North Miami where you could take your car up to your apartment. So yeah, we had major clients, extremely high quality demanding clients that, I had to undertake as for having my own company. I started in the company about 9 years ago, my own company. But like I said, I was born and raised in the industry. And then about 2 years ago, I got started in the technology side of it, technology and finance. A lot of people get a little bit confused with the technology side of it. the whole blockchain component, a lot of people tend to relate it with cryptocurrency or Bitcoin, and really that's only a minor, extremely minor component of what, this great technology could offer. And so I got started developing blockchain solutions for horizontal economies, sharing economies. Like I was saying before, in the Industrial Revolution, it was all about vertical companies, just these huge empires, right? And now it's more about sharing. And so blockchain brings a lot of solutions to this new economy that millennials are pretty much bringing. It's almost like the third industrial revolution going on right now. It's getting started. So 2 years developing solutions in the shared economy into finance. And so it was about 18 months ago that we got started. Me and my partner, we put this new model together, which is Arch Real Estate Holdings. That essentially what it is it combines real estate development with technology and the finance component of it.
Okay, fantastic. So I have to ask you, so during your running your architectural and design business, you said you got involved with the blockchain technology. Was it just a hobby? I know you're building verticals for the sharing economy there, but working on little side projects. I mean, was it truly just a hobby that turned into something bigger?
Yeah, at the beginning, you can look at it as a hobby. I mean, most of the people in the blockchain industry, we got started at, the whole crypto craze. A lot of people making a lot of money in the early, Bitcoin days. It's just trying this new technology, and they have so much to offer as for, the currency side of it. But then make no mistake, don't get confused. Our project in Arch Real Estate has nothing to do with cryptocurrency or Bitcoin.
Why don't you go ahead and actually explain the differences between the two? Because I'm sure there are probably plenty of folks that really just intertwine blockchain technology with cryptocurrency, right? Like for those that aren't in the space, I'm sure it's a very common misunderstanding. So if you could take a few minutes and let's explain the differences.
You can look at it this way, Kevin. Blockchain is a technology. It is not a currency. It is not Bitcoin. It is not cryptocurrency. Cryptocurrencies are built on the blockchain and use the blockchain. But that doesn't mean that you cannot use blockchain for many other things. You could compare the blockchain to the internet. We can do a lot of things with the internet. Right now, we're holding an interview with the internet. You can do emails, you can hold websites, webinars, and you name it, communications. So the internet is the technology. It's not directly attached to, say, hosting a website. That's one of the million things that you could do on the technology. So that's pretty much how you can look at blockchain.
That's actually a great explanation. So like you got the internet, and then someone might have an e-commerce store on the internet, but it has nothing to, those are two different things. It just happens that the e-commerce store is hosted on the internet platform. Correct. That's a great simple way to put it.
And so blockchain offers a lot of solutions for many problems in any industry. I mean, you look at Walmart. They're already working with blockchain on their inventory side of it. It's just like you could trade the transactions on the currency side of it. You could just trace anything backwards. So I don't know if you heard, but recently there was an issue going on with, I think it was the lettuces in Walmart, and they were able to trace that back to the origin and find really what the root of the problem was because of the blockchain. Because their inventory, they're implementing blockchain into it. I mean, and you could work out solutions for, production lines, like I said, inventories, suppliers, any sort of industry that you need to trade something from the beginning, and decentralization in the financial side of it. We know a lot of people like to mess with financial power, and there's a lot of criminal activity involved in many ways because it's centralized. At the end of the day, you depend on somebody, you depend on a trust company, you depend on a government, you depend on a CEO, right? But with blockchain, essentially what you do is you program the software according to what you're looking for, what your goal is. Doesn't matter what it is. And so it will be decentralized and it'll act on its own, taking away the power of just somebody tampering with it. And there's millions or billions of things that you could do with the technology.
So help me understand how Arch Real Estate Holdings, how do you guys integrate this technology into the real estate investment platform?
Right. So the blockchain technology is embedded into Arch Real Estate Holdings on the financial side of it, not on the real estate performance side. We have a 550 property portfolio. The properties are completely normal properties, traditional models. Everything's traditional tenants, just like any other REIT that you have out there, if you would say. I think that's the most comparable type of entity. No blockchain incorporated into the performance of the assets. Our blockchain solutions are incorporated rather on the financial side. And when I say financial side, I mean this real estate is being securitized. right? So you create real estate backed securities, no debt. Usually, and I want to make this clear, usually people get confused. And when they start mixing securitization with real estate, they're already thinking about debt. There's no debt involved. Our instrument is direct equity ownership. So we are taking this 550 property portfolio that's worth $100 million, and we already securitized it. And so we have investors that are buying the securities, and so they become stakeholders of real estate equity, right? And so that is where blockchain comes in. These securities, essentially what they are is just like any other paper stock, but we take the paper stock and we code it on a software which is called a smart contract. And that's where the blockchain comes in. The stakeholder, instead of holding a piece of paper that is saying you have $1 million worth of stock of this real estate portfolio, what they have is a smart contract that gives them the same power of ownership, but then it gives them a lot of other solutions. Main solution that blockchain is bringing, because this is a private placement, which means that these securities are not publicly traded. So usually on a private placement, Kevin, the investors are illiquid because it is a private placement. You cannot trade the securities just like you would any other publicly traded security, right? So that's where the blockchain comes in. You can now trade, you can sell, and you can buy private placement securities through blockchain security trading platform. There are many companies, well, not many companies, there are only a little, but a small amount. Right now there are two that are live and trading, and that's T0 and Open Finance, which are the only two blockchain securities trading platforms authorized and live and running. We are approved to list our securities on both of these exchanges. And so through these exchanges, investors can now, liquidate their stake in a private placement. And so they have the liquidity that really not only real estate never had, because, you can own real estate, you can have millions of dollars in real estate, but who are you going to sell it to? It can be a little bit complicated, right? Yeah. So that's one of the solutions. Another of the solutions that blockchain brings is the accessibility. If you want to sell your real estate or your privately held securities, you can only sell it to your buddies, your neighbor, somebody you met. But like I was saying, you cannot publicly trade it. So now you're going to be able to sell it to somebody from across the globe, because they now have the accessibility to go online and to get whitelisted in this T0 Open Finance platforms, and they can buy your security. So you got liquidity, you have accessibility, and then you have other solutions as for voting rights, DRIP programs, which is dividend reinvestment programs for the folks that want to reinvest their dividends. And then you got like I was saying, voting rights, dividend reinvestment, and dividend paying. So these dividends are being paid. Obviously, these properties are generating income. So these dividends are being paid through the blockchain.
Got it. And how is the blockchain, how is it, and excuse the ignorant question, if that's what it's considered to be, but how is it converted back into normalized currency?
So here we go again. You're confusing blockchain with cryptocurrency. We have no cryptocurrencies, no Bitcoin, no nothing involved in our.
I got you. Fair enough.
Yeah. But I like the question, because listen, that is exactly what most people think, and it is perfect that you brought that up, because it helps to clarify. We are paying our investors with fiat currency, which is government issued currency, sure. US dollars. Our investors can choose to receive a check in the mail, or they can choose to receive their compensation through the blockchain, but then it is done with what is called a stable coin. Now, this is a cryptocurrency, but it's a stable coin, which is one of them. A perfect example is a USD coin. This is a cryptocurrency that is backed by the US dollar, so it doesn't fluctuate in value. Its value is determined by the US dollar. So you would receive your payment on your digital wallet using this stable coin, and you would immediately liquidate it and be able to liquidate it into fiat currency or US dollars.
The two exchanges you mentioned, please name them again, because I'm going to make sure we get those in the show notes. The very first one, I didn't catch the name.
It's T0 and Open Finance.
Like T0, like the letter T and then ZERO. T0?
Yeah, letter T and just the zero. And that their name is a particular name because for the folks that know a little bit about securities and trading, we're all familiar with the terms T+1, T+2, T+3. This is essentially when you buy traditional stock, paper stock, you have a holding period that you cannot sell those securities for 1, 2, or 3 days. So that's T1, T2, or T3. And that is because the entity that owns these securities, they have to record the new owner in their books, because that is a key fact as for when it's time to pay out dividends, who was holding this security when these dividends paid out and whatnot. And so that is entirely done by human beings, and blockchain is done automatically by the software in the blockchain. So that is why they call themselves T0, because it is immediately, instantly done, and because you don't have to wait for these securities to be, pretty much transferred to the new owner. You can trade them immediately. So it is T0. So you hold them today and you can sell them today. That is why they're called T0. And then you got Open Finance, which is the other company that is live and running right now as for securities.
Give me the idea of like the grand scale of how many true transactions happen on whether it's a daily, monthly, annual basis through these two different platforms, the T0 and Open Finance. I mean, just to better understand the grand scale of where this technology is at right now today.
The question is how the transactions happen?
Like how many? Just I know maybe you don't know the exact number. I mean, are there thousands of daily transactions happening between these two different sites? Is there hundreds? Is there millions?
So right now, both of these companies they're just getting started. They just launched their platforms 1 or 2 months ago, if I'm not mistaken. So they're being very picky right now as for what are the securities that they're going to list. So right now they're not being worried about having volume in transactions. Okay. They're rather being worried as for handpicking the right securities, because remember, there's a lot of speculation in the whole blockchain industry. There's a lot of projects that are they're bad actors and they're just not great projects. There's a lot of those. So you got to be careful. You got to be able to pick your good projects in order to have high quality projects listed. Once they have their securities listed, then they're going to have the volume. But right now, there's not much volume. They're going through the process of handpicking these securities. And obviously, we've been approved for both platforms. So that tells you a lot about our project.
Outside of the traditional investment method of investing in a security, like a private placement, what are some of the risks associated with this blockchain technology? Like, I understand the advantages of it. We can speak more to those, but are there any risks associated with it outside the normal traditional methods that most folks that are listening to the show know of?
There are many risks involved in any new technology, and blockchain's been around for a decade, so it's not completely new. But obviously, there's a lot of risk. But our focus, and this is a great question because I want to make clear that our focus and our vision and model since the beginning has been just being a solid, safe project, traditional project. We are no venture. We are not trying to reinvent the wheel. We're not saying that, we're going to take over the financial industry and the banks are going to go away. We're not trying, banks, they're our friends. We are a traditional financial instrument, just like any other, with extra layers of safety and security. As for risk mitigation, exploring with blockchain solutions for the trading and behavior of these securities. But what's behind the security? What is performing? It is no venture. We are not trying to reinvent things. It is a proven method that has been going around for more than a century now. Now, what are the risks? There are many risks that you have all these other venture companies out there just exploring. They're great companies. They're going to come up with great solutions. But we are not a venture. We are not exploring with the risky side of it. But it depends. I mean, if it's in the currency side, what's the risk? That the markets are not sustainable. You don't have a good enough trading volume. You can never get rid of your currency. Or if it's in the legal side of it, well, what's the other risk that you could encounter? You could encounter many other risks. Like scalability, perhaps. Blockchain has problems with scalability, right? There's a lot of concern. These currencies that obviously for us it's not an issue, but you have all these companies that are trying to, come up with solutions for, let's say, perhaps Visa. They're trying to take Visa away with transactions, and then you have scalability issues that Ethereum network, which is the most common network, has scalability problems where they're only making, I don't know. I think I don't know the exact number, but I think it's a couple of dozens of transactions per second, where you have Visa that does 25,000 transactions per second. So there's a lot of risks. Depends on what you're using it for.
No, fair enough. And that's good. I appreciate the feedback there. And as far as like let's talk about the crystal ball theory. I mean, the technology's here. It's not going anywhere. It's been here for a decade or so. It's gotten a lot more media attention over the last couple of years. Where do you foresee the future going with blockchain as it pertains to real estate? And then I guess the second layer of that question would be, do you truly foresee it being a major disruptor on how we handle traditional business today?
Yeah, it is definitely a disruptor. And I definitely see it as a monumental disruptor in many industries. But my way of looking at blockchain is not the revolutionary side of it. A lot of people, they tend to relate blockchain people with revolutionary new kids just saying that, like I was saying before, we're gonna take over the financial industry. Mm-hmm. Banks are gonna go away. We're gonna destroy it. That's not gonna happen. It is definitely a big disruptor, and I see it, being an incredible solution for many issues and problems that major companies have today. Like I was saying, Walmart, they're already using it for their inventory. You have a production line, quality solutions for being able to trace back a product that doesn't meet the quality standards. Well, why doesn't it meet this quality standards? Let's just go back and be able to find out what happened. And so it has a lot of solutions, and it'll definitely, it's here to stay. It's mm-hmm. going to become the next norm, and it's now merging a lot of great companies out there. Like I was saying, many venture companies are just merging it with IoT. Your home is just going to be connected with your phone and your car, and then you're going to be out at work, and you're going to be able to interact with your home. You're going to have smart homes, AI, artificial intelligence. That is all going to come up and it mixed with blockchain solutions. It's still a long road ahead, but it's definitely here to stay. As for real estate, Kevin, there are many solutions as well. I mean, looking forward, say 30, 40, 50 years in the future, I mean, the technology is here. It's just a matter of adaptation.
Sure.
Like I was saying, on the performance side of it, we don't have blockchain solutions, but imagine this, picture this. And you imagine our tenants of our 550 properties just paying their rent with cryptocurrency, and then they being paid in cryptocurrency, and then they pay the rent on cryptocurrency over smart contracts. They will never miss the rent, and then that money would come onto us, and it will automatically flow all the way to our investors or stakeholders' hands. Mm-hmm. Those are autonomous systems, autonomous corporations, and the technology is here, but it's going to take a lot of effort. It's going to take many decades, and it can definitely get there. There are many companies that are exploring with it, venture companies. We are not trying to venture into this. We have a traditional model. When these companies come up with the solutions, we will definitely engage with them. And when these solutions and new technologies are proven, we will welcome those solutions to our model. But as for now, we do not venture with anything. We are very conservative, and our main vision is risk mitigation.
Got it. Fair enough. Well, let's talk about that a little bit. Let's talk about Arch Real Estate Holdings and really what your guys' specialty is as far as the real estate side is concerned. What is your asset class of choice? Where is it? The 550 units that you speak of, is that in the residential space?
It's residential, multifamily and single family units, and vacation rentals as well.
Okay, got it. And that's your core focus today and moving forward as well as residential of that type?
Yeah, mostly residential. Our plan and our strategy ahead is actually to raise $700 million. This is only phase one. Phase one is the smallest one for 85 mil, which is pretty much, like I was saying, these properties are worth $100 million, and we're selling them for $85 million, which obviously it gives the investor some capital gains right off the bat. This is just phase one. Phase two is for 250 mil. Phase three is for 200 mil as well. We have that information on our website that folks can look and see what are the upcoming phases. But it is all real estate. It is all residential real estate. It is all focused on multi-family units. This is, residential real estate is greatly outperforming commercial, and where we're going to with this new sharing economy and how millennials are just behaving. This is going to be the norm. It's now you're gonna have less and less homeowners and more renters. So that is why, our residential real estate really has a lot of potential there.
How about the geographical focus? Are you guys targeted in a few select markets? If so, what are they?
Yeah. So right now we are focusing solely on Puerto Rico, which is, for folks that don't know, it's a Commonwealth of the United States. So it's U.S. territory. Right now, there are a lot of new tax incentives in place that have been put in place lately for the past 5 or 6 years that are really welcoming or bringing a lot of capital investments into the island. And the government has 95% tax exemption. That is unheard of. Investors coming in and investing in any sort of capital into capital investment to the island, they'll be able to just avoid 95% tax, state and federal. So that is bringing a lot of capital into the island. That combined with what happened, 2 years ago, with the huge Hurricane Maria hit, it was a 200-year history hurricane, and as a consequence, was a terrible thing. But as a consequence, a lot of capital flooded the island. You got insurance capital, you got FEMA and refurbishing, and there's a lot of construction going on. So about $30 billion were unloaded into the island's economy in 2018 alone. It's about 100 bill. Sorry, did I say 30 million? It was 30 billion.
Yeah, I figured, yeah.
Yeah, $30 billion that was injected into the island in just 2018. It's about 100 billion that are expected to come. Insurance, the insurance money is not even halfway through. The people that are, claiming their insurances, there's a lot more to come. There's a huge growth going on right now. The country is going from 2018, going from a negative 2.7% growth rate to almost 2% now. That's a delta of 5%. That is huge. So in just 1 year. And you have all this trend going on combined with these tax incentives. The island is an opportunity zone. And it is really a hot zone for investors around the world. Right now, it is a top choice, a top global choice for investments. That is why we have we're focusing in the island, not only because of what I just told you, but because we have the ability to acquire these assets for cents on the dollar. That is why the project does not have the need to leverage or have any debt because of the low acquisition cost. And so that brings risk mitigation. When you buy distressed assets, they just cannot depreciate anymore. And when you combine that with all the new, the potential of what's going on, it's just a great investment instrument for stakeholders.
How are you guys? I know you're going to start with an $85 million fund, and I think you mentioned it goes to 250. You're like a second phase is going to be a $250 million offering. As far as like the acquisition side, I mean, that's a great deal of real estate, especially when you're focused on, one geographic location. It happens to be an entire island, right? I mean, it's a large population, but what does that side of your business look like? How do you intend to scale the acquisition side to, meet those demands again, or to deploy that amount of capital?
Well, remember, Puerto Rico GDP is over $100 billion a year. So when you look at it from that perspective, we're not taking over the island. We're not even close.
No, I didn't mean it that way. I mean, but still, even if you come to the United States and try to deploy $250 million by single family properties, residential properties, there's a lot involved there. Lots of individual transactions, lots of knocking on doors, pounding on pavement to uncover the opportunities. And it takes the manpower to do it, right? It takes lots of systems and processes to efficiently make that happen.
I got money. Yeah. I understand your question now. So that's a great question. How were we able to acquire this many properties at once? There was a housing crisis that went on in 2008. USA, the country recouped, and it's all good now. But Puerto Rico, they couldn't really bounce back from that huge crash. And so banks were left with thousands of properties on their books. They currently hold a couple of thousand properties, these banks. And so there's just 5 owners in our real estates, and 3 of us were from there. So where we come from, the people that we know the right people in order to be able to sit down, with just one single bank and say, I'm buying 400 properties, I'm buying 150 properties, and that is why, like I was saying before, we were able to not only acquire this many properties over like just one transaction. We're not going around and saying, hey, I want to buy your property one by one. And that would be a huge amount of work. So we're buying these properties from just 2 or 3 institutions alone. And because we're buying so many properties, that is why we are getting such a good deal on low price.
Got it.
On the dollar. And that is why the investor is being able to capitalize on that. Because remember, you make money on the buy.
Yep. You
don't make money on the sell. If you buy right, you make money. And so, yeah, that is how we are able to do that. Coming to the second phase, $215 million, it's going to be almost the same sort of move. On the second phase, we are rather focusing, instead of just single family units or multi-family units scattered around the island, because they are scattered, obviously in the main interest, high potential tenant value areas, but they're all over the place. But instead of focusing on just homes, we will be solely acquiring abandoned or REO buildings. So REO properties, homes that we are buying right now. We will be buying REO buildings, a couple of buildings, say 10, 15, 20 buildings of residential units, rather than just buying a lot of houses like we're doing right now. So that's what
Understood.
We're looking at phase 2.
Got it. That makes sense. I appreciate that. Omar, this has been a lot of fun. Lots of great information you've shared with us today regarding the blockchain technology, regarding your involvement in the real estate space and how you're kind of marrying the two together. Just really behind the growth of Arch Real Estate Holdings and all the things that you guys have planned there in Puerto Rico. If you had one last final gold nugget that you could share with us, again, you've already given us a bunch. Hopefully you've got one left in your pocket you can share. That one last gold nugget that would inspire and motivate our listeners here today as they pursue their real estate investing career. What would that one last gold nugget be?
It can be something very simple. You have different type of people in your audience, but a lot of people they think a lot as for traditional real estate investing as if, I'm buying a house, or I'm buying 10 houses, or I'm buying one house, and when I get money out of it, I'm going to buy 2 more. And then eventually, perhaps in 20, 30 years, I'm going to have 15, 20 properties. To do that, that's great. But I think it's important to be able to tell and make people understand what this instrument is doing, what we are able to offer to people that are interested in investing in real estate. We did the legwork, just like you were asking, how you make this huge thing happen. There's a lot of legwork being put into this, right? A lot of efforts. We've been with our foot on the ground, just making things happen, acquiring these properties. Not only acquiring these properties, but partnering with the right companies. We partnered with PMI, Property Management Inc. I think they're the largest property management company in the USA. So they've partnered with us. They're the company that are going to be managing these properties for us. So we're doing the legwork. We're doing the hard part, just so folks can essentially and simply buy securities, real estate securities, equity securities, no debt, because they own the real estate through these securities and just have passive income. A lot of people think that, when I rent out 2 or 3 units, that's passive income. That's not. You're going to have to deal with tenants. You're going to have to deal with, broken refrigerators, and a lot of stuff going on. So that's not passive income. You have a lot of liabilities as well. So when you invest in a real estate vehicle, rather, it's essentially the same thing as owning a real estate asset through a security that is managed for you, and you get true passive income. You get checks in the mail. I think that is very important because real estate is a very broad, real estate investment is a very broad industry, but there's a lot of people in it. A lot of people understand the real estate securities side of it, but a lot of people don't. I think that's key, because many people get confused and they think that if it's real estate securities, they're investing in debt. But that's not the case. You are owning a real estate asset that is performing, and somebody else is handling it for you. And then you're receiving 95% of the net profits are being paid out to these investors. So you're getting true passive income. I think that for me, that is the golden nugget that they can take away, take home and just pretty much reflect upon.
No, that's absolutely beautiful. And that's what this show is all about, is real estate investing for cash flow. And, there's not many opportunities to truly be a passive real estate investor. Like you'd mentioned, if you're going to go out there and start building your portfolio yourself and buying a property at a time, and you're going to be dealing with the day-to-day management, getting a call when the refrigerator breaks and things of that nature. And there is nothing passive about that whatsoever. And the more properties you add on top, the more properties you stack on top, the less time you have to actually enjoy the things in life that are important, like, your family, your friends, traveling, making memories, things of that sort. And so
that's correct.
It's very much I think it's a exercise that everyone should go through that's getting started or wants to get started in real estate or buying real estate as an investment, to really understand what side of the equation they want to be on and what side they should be on, right?
That's correct.
Being an active investor isn't for everybody, right? It's
exactly.
for some, but it's not for everybody. And you need to figure out where you fit into the equation. So
exactly.
With that being said, Omar, I really appreciate your time. Appreciate you coming on the show. And folks, to learn more about Omar and his company and what they've got going on there in the real estate and blockchain space, you can visit his website, archsecurities.com. Again, that's Arch, ARCH securities.com. And Omar, thank you again for joining us. And thank you everyone else for tuning in. And until we meet again next episode, this is your host, Kevin Bupp, signing off.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com, and we'll see you next Monday morning.